The price of silver saw a 34% increase over 2023, and in 2024, a further 22% gain was seen. So, what is the future going to hold for silver? Are we going to see a correction or are we going to see a sustained rally? The answer, I think, is in the fundamentals of the physical market. Whilst most investors will probably be looking at the central banks and what they're doing in monetary policy, because this is what dominates most of the media that we consume, the physical market is something that's overlooked, and Auronum has recognized this and published some research recently on the website. You can get the link to those below in the description if you want to see, but for the purposes of this video, I'm going to skim over the surface of some of the key points so that you can understand what's going on in the physical market. In 2024, it was confirmed that silver in the physical market was in its fourth straight year of deficits. And what that means is that silver demand is greater than silver supply. And the only way the market is staying balanced is drawing down on above ground stocks. As we'll get to, the reason for this drawdown is mostly demand linked. But if we take a quick look at supply before we delve into the demand details, you can see that supply over the last decade has been very constant for silver. It's a very reliable, steady supply of mining and also recycling. Around 1 billion ounces per year is put into the silver market, and around 80 to 85% of that is coming directly from mining supply. The rest of that is recycling. And we have seen since 2015 an uptick in recycling rates. The reason for this is obviously the market bottomed around that time, and we have gradually seen silver prices going up, which is encouraging some selling. The mining of silver is spread quite wide across the earth, so it's not like platinum where there's concentrations of output. And because of this, mining supply is quite predictable. However, since 2015, we have seen a general gradual downtick in the amount of silver that's produced from the mines. As of 2025, what we are expecting is an increase in the silver production from mines year over year. And the reason for this is that a Peruvian mine is coming back online after some adjustments for profitability and also safety. And there's a Moroccan mine as well, which is expanding its output and opening up new areas. 2024 saw the record for the amount of silver consumed by industry. It actually went above 700 million ounces for the first time ever in 2024. A lot of this is because of the growth of renewable generation and silver's role in that. Silver is the best metallic conductor of electricity, and so for these technologies to be efficient, they need silver. Mining supply is around 800 million ounces a year, so industry is only leaving around 100 million ounces in the market. It's literally absorbing the lion's share of mining supply. The biggest reason as to why the amount of silver consumed by industry has gone up so much is because of the green revolution. So, renewable generation, especially with solar panels, is needing a lot more silver than what it did a few years ago. Because the silver price has been gently drifting higher over the last couple of years, we have seen since 2021 an increase in the amount of recycling of silver. So that's silver being sold back into the market and smelted down into new uses. There are some tells in the market as to where exactly this demand is concentrating. And as you can imagine, with most commodities now, it's the Chinese demand that's really drawing down on the market. China once had a discount in the silver price. So it was cheaper to buy silver in China than it was in the global markets or in London. And this is because they had a lot of domestic production. They still do. But the amount of consumption that is happening domestically in China has increased. And now they are paying a premium in China for silver over the global benchmark prices. So we know that the silver market has been in deficit for 4 years straight now. The way that we balance the market is by taking silver out of above ground stocks. So, what does this mean? During the period of 2010 to 2020, we saw a gradual surplus of silver. There was a glut of silver, more silver than we needed. And so, what we saw across the world is inventories build up. In 2021 and 2022, the deficits was so severe in the silver market that everything that we'd put into storage over that decade of 2010 to 2020 We actually took that out in 2 years. In 2020, the amount of silver in storage was enough to meet demand needs for 22 months. As of 2022, this figure has gone down to 12.3 months. So, if all supply of silver was to dry up, the amount that we have in storage at the moment would only be about 12.3 months of consumption. The technical setup for silver shows us a few things that we can make assumptions and forecasts on. Going back to 2014, this was around the time when the market was bottoming, and between the next 5 to 6 years, silver was quite a benign market, just range bound, going sideways, and not a lot of excitement. After the lockdown, the price went up and we managed to stair step higher into a new trading range, which it held for a couple of years until we got to the beginning of 2024, where we broke out into the higher trading range that the price is currently in. We're at the bottom of that trading range, around $29 per ounce. And the thing that I would like to point out now is that this potentially is a good entry into the silver market, but if we do manage to break below the floor of this trading range into the previous trading range, that will be, I think, quite short lived based on what we know about the physical market. Because if silver prices go down, that will mean demand will go up. There's a lot of people wanting to buy the dips. You've got a lot of institutions wanting to buy as cheaply as they can. And I think that they will see a drop into that trading range as a gift that will get bought based on what we know about the physical market. There's structural deficits, and we are quite aggressively drawing down on above ground stocks. So, if we do break down into that lower band, I think that that does not last for very long. So, it's a tremendous buying opportunity. If we break above the new trading range and go into the next potential stair step higher, I think we don't really have much resistance until we get to around 43 to $44 per ounce. So we have the room to go up to the top of the current trading range, and then we have another 10 to 15% before we really find any meaningful resistance. So I think at these levels, silver is definitely a good buying opportunity. Any weakness will probably be very short lived.